Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. The 12th. We got a 3-day weekend going on here, so this is always interesting because sometimes you get really crazy stuff going into the holiday, and sometimes you get nada. You get nada. Make sure. Okay, so we don't have the date of the video, right? Let's fix that. Here first, it's the 12th.
The Canadian wholesale sales,
and I do have the robots on here. We are going to get some numbers here, but it's just Canadian wholesale sales, so not care too much about that. Robots are on. So let's go into the charts here. Well, you can see it's been a pretty constrained week here in the S&P 500 on the daily chart. Pretty tight up here, but we are at highs. I'd say, though, it's been a difficult week. There's been almost every day significant sells. And these sells kind of come out of nowhere and are really ugly and don't seem to be premised on any kind of news. They just come out of nowhere and all of the robots freak out. So that's kind of what we're looking at here. There was a pretty significant dip overnight, but we have since recovered that. Meanwhile, in the treasuries are pushing down, which I think is where we need to go. They kind of been treading from the auctions and all these other things, but in the CPI data also really important. But I think here ultimately that the treasuries will move lower on expectations of future inflation, even if it's not showing up in the CPI data now. 6 months from now, according to what Fed speakers say and so forth, we expect to see more inflation. So do we see it in the rest of the commodity complex? Well, oil's not doing so hot today, but again, there's all sorts of news going on over there with OPEC and so forth. Gold took a bit of a hit yesterday. It was kind of more after we left. Recovering a bit though. Silver, not hit as hard. Copper also taking a bit of a hit overnight, but recovering most of its losses. So we're not really seeing the inflation narrative yet. That probably means that what's going on in the treasury curve is more isolated to treasuries and supply and demand based. Excuse me. Now coming back over to here, Bitcoin did decide to make another slight rise up. So they had that big move to 4,800 and it came back pretty significantly. And then here comes another big buy up and that takes us to 48,000. So I don't know. I have to say the charts on Bitcoin in my model are doing wild stuff that I have never seen before. Nothing even remotely close to this. And I can't really say what it means. It looks to me like we are here at a peak in speculation in Bitcoin, but that there is now some other catalysts coming in and supporting it. So maybe it's good for Bitcoin. I'm not entirely sure. Either way, though, not something I want to be involved in. And if we come over and we look at stocks, not a lot of significant changes. You can see silver is down. AG is down about 1% here. MSTR up about 5%, although they're really stuck around that 1,000 level. Some of the tech names doing okay, like the smaller tech names outperforming, but the larger big index names like Apple, Google, and Tesla all down slightly overnight. Yeah, I saw that BNY Mellon plans to hold Bitcoin. I saw that the other day. I'm still. So here's the thing. What would be the sort of news catalysts that would support Bitcoin price? People using it. Okay.
10 seconds.
If Best Buy came out and said that they will now accept Bitcoin for payment on items, then I would be impressed, and I would say that that is a reason for Bitcoin to move up.
1.3%.
But guess what?
1.3%.
There's 0% chance of that happening because it would be too expensive for Best Buy to transact with Bitcoin. And that is the fundamental problem. What you are seeing here is basically a bunch of people saying, oh, everybody is speculating with Bitcoin. We'll jump in that pie and take a little bit of that too. But it doesn't mean that they're actually going to use it. They're just going to let you hold it and keep it on the exchange and make money from you trying to speculate on it, but not actually using the technology. And thus, what is really going to happen? Well, eventually, you're going to run out of stories like that, or you will run into the block size limit, and the whole thing will come crashing down. And it will be like an 80% drop overnight.
Rising 1.9% from December. This is coming from Statistics Canada flash estimate.
That's what's going to happen over there. Again, if I saw retailers saying that now we're going to accept Bitcoin, and I could go to a Walmart and I could use Bitcoin, maybe it would be a big story. But every story that I keep seeing coming out and pushing Bitcoin up is basically like, other people are buying it. I need to buy it too now. Doesn't interest me. Remember, somebody else buying something is not a reason for you to buy it. When somebody else buys something, you already missed the trade. Get in before the move. If you know that somebody is going to buy something, they haven't done it yet, they haven't announced it yet, but you're sure that it's extremely likely, that's a good trade.
The rate is now at -5% to -2%.
Otherwise, you just didn't leave.
Virus rate number is 0.7 to 0.9.
Anyways, let's make sure that we've got the text to speech on here. I'm gonna be keeping a close eye on this here, because I mean it'll be good practice. Like, I don't really think that anything is going to happen, but the chance of it being there is enough that I think I need to be on alert. You know what I mean? Okay, so let's get the text to speech going. There we go. Crack my back. Blow my nose here real quick. The market ear says, watch inflation when rents reverse higher. Ooh, yeah. You know what? When they get rid of the moratorium on evictions, you know, like probably sometime after the spring, it's going to get crazy. Because, yeah, probably a lot of people are going to get kicked out. Probably rents are going to rise. And it's the rents not rising. Remember, in the last CPI report, this is why it's so important to read through the report and know what's in it, right? So everybody says, "Oh, it doesn't actually track inflation, but it tracks the cost of housing, track the cost of food both away from home and at home, and it tracks the cost of energy." And yeah, there's other things, but those are kind of factored in other metrics. Anyways, so why did the CPI number, why was it less than expected? Because in places, particularly like New York, there are still rent moratoriums and they're not able to fill the houses. They're not able to fill the houses. And they're not able to kick people out. And so that's keeping the price down. And when this recovers and those prices start going up, yeah, you're going to get CPI inflation. Probably. The moratoriums on evictions is basically a bomb waiting to go off, says Uzi. Yeah, it seems like I've been waiting for this for months and months and months, and it never comes, though. You know what I mean? Like, nobody talks about it. I kind of wonder if it's really not what I originally thought it would be. You know what I mean? But all we can do is wait and see, right? Do co-location computers apply to futures if the institution you wanted to set up their machines in? Yeah. So if you want to do co-located servers, I would go to speedyservers.net, I think is the website. And they have co-located servers over in Chicago that you can run your algorithms on to get the best execution. And if these robots turn out to be pretty good, and maybe we put a combine on them and stuff, then I will go and rent a server like that. For now, though, it doesn't really make sense. Okay, so let's go through on Twitter. Oh, not too much. Not too much. I've been doing good on Twitter lately. Been doing really good on Twitter lately. I'm pretty happy with what's going on. Doomsday Finance, I should know. I don't have very good biceps, to be honest with you. It wouldn't be all that impressive. Okay. Number of COVID deaths among 523,000 fully vaccinated Israelis is 0, as tweeted by Trading Floor Audio. Joe Biden gave his cup of coffee to somebody, a member of the press, and promised that he didn't have any of it. That's funny. Yeah, probably shouldn't be doing that, but that's okay. He didn't have any of it. It's okay, guys. It's responding to somebody in Platform and Brokers. They were like, "Oh, it's so expensive to do the jigsaw." And I was like, "Well, yes and no." Oh gosh, FT posted its picture of a laptop. I shouldn't show you guys this picture, but I'll show you anyways. I shouldn't show you guys this picture. So this laptop, and it has like all of these screens that pop out. Pretty hefty looking laptop, right? FT posted a follow-up. You should get, you're gonna need one of these Autobot transform things too. The whole thing just has me so triggered though. It's because so many day traders want laptops. I'm like, no. Use a desktop. A desktop is better for what you're doing, guys. My eyes are pretty weepy today. Well, pretty calm. Treasuries did move down to the low since the open. They had traded back and forth across that area really well, but look, now they seem to be on a tear. You think that they'll retrace this move from the other day back to 18.5? If you wanted someone to program an algo for you, could you pay them and make them sign a contract so they won't use it themselves? I would expect there to be a lot of complications. Yeah. I mean, there's different ways that you can set it up and do it. It's kind of... I mean, you can. So here's the thing. If you have a strategy and you've been trading it for a long time and you've been really consistent with it or whatever, but now you're just not quite fast enough and so you need it to be automated, then that would be a really good situation to go and hire a programmer. Okay? But if you want to go in and say, well, I want a strategy that makes use of the super smoother moving average, but I'm not entirely sure exactly what the best setup is, and you're going to have to try a bunch of different things. And so they're going to go and they're going to optimize your algorithm and do all of this and that sort of stuff, right? This is where I think that really you need to do things yourself, because, you know, if you're adjusting the algorithm and then what happens when the market changes and how do you deal with it, and you don't know how to change the algorithm, you maybe don't even completely understand why it works. That's a problem, right? So when it comes to paying people, you can certainly put whatever you want in their contract. I haven't done work for people of that nature because I don't want to be in that position. I don't want it to be like, oh, they come back, I'm having problems with that, I need you to do additional work, that sort of a thing. So I'll consult people if they want, you know, some help writing it themselves, or they're coming into a roadblock, I will consult. And you know, if you need help writing something really, really complicated, a complicated part of it, then, you know, I could help for that for a fee. But largely, I'm much more about that. If you want to trade, you've got to do this stuff yourself. You've got to do this stuff yourself, because it's a competitive environment. And yeah, like just think about it. How it would be if you were playing in the NBA and every time that you needed to make a drive to the basket, you had to outsource it to somebody else first, right? That kind of, I don't know, or maybe you're really good at distributing the ball and everything, but you could never make a shot whatsoever. It's just, there are certain things that you have to be able to do at a certain level to be competitive in the NBA, and I think that in trading, that we are soon approaching the point where, in order to be competitive in trading, you have to be able to program yourself. And so I say that there's no better time to start than now. That's why you need innovation. Yes, exactly. It's a competitive, oh my gosh. Oh, this just reminds me of this thing I watched yesterday. So one of the YouTubers that I like to watch is CoffeeZilla, and his channel is basically calling out fake gurus and scammers and stuff. And since I've had so much trouble with fake gurus harassing our channel and things like that, or just spamming, like, I'm a really big fan of his. And so he had a debate yesterday with this guy. He had a debate with this guy who I guess is I wouldn't call him like a scammer guru per se, but he's like a really into the self-help thing. This guy in particular believes very strongly that college is a scam, that it's not worth it, and that you shouldn't go to college. And, CoffeeZilla is trying to argue with him about it, like pointing out the statistics that, like, the statistics is straight up that the better educated you are and the further you got in school, the more money you tend to make. But this guy, oh my gosh, he would not shut up. And it was like this person, it seemed to me like he had watched a lot of arguments. He had consumed a lot of self-help content. And so he was able to mirror or repeat the kinds of things that he had seen other people make arguments about, but he really did not have the ability to come up with his own arguments. And so he was just so often saying things that made absolutely zero sense. And the guy just looked like a complete fool. But CoffeeZilla was going through and they were arguing. This guy was like, yeah, you should use experience from other people, and you can learn from other people. And CoffeeZilla said, no, like, you have to experience things yourself, and you have to do them yourself on a lot of these things. And what you get from the course doesn't really help you compared to doing it in person. True, but there's another part to that, though, that I don't think CoffeeZilla narrows in on, that I think is really important. And that is that all of the things that he's talking about, and what we're talking about here in trading in particular, is competitive. Taking a course, using indicators, methods, analysis, information that is common enough out there that people are making courses about it now, is not going to give you a competitive edge. It'll get you to break even. It might be good information. Maybe the course is worth it. Maybe the course is not. If they're trying to sell it as, it's so easy and then you'll be rich, then it's probably not worth it. But I can share with you a lot of information. But the best thing that I can do for you is teach you or convince you that you need to be self-sufficient, that you can't just go and read somebody else's strategy and trade that, or have somebody else program the robot for you and trade that. You've got to do the work yourself, and you've got to be good at it. And there are a lot of people out there doing this, right? So what is it that you're going to do that's going to make you better at this than all of them? Beyond just like what your signal is, right? And so many people I see in day trading they think that, oh, well, my edge is a moving average, and I just need to do the moving average, and I'm so much smarter and better at seeing patterns than everybody else that I'll just make it. I don't know. I mean, there are people out there that are like that, like Ace. I tell you what, I know Ace's signal. I have stuff sitting here on my screen that shows me when he's going to tend to get in, but he trades it better than I would. I don't know what it, there's something that even he doesn't understand about it, that he knows when to take it and when not to. In certain periods where he catches them and they run, and he manages it so well. And I'm telling you, that's like something special. And most people aren't going to do that, you know? So what is the thing that you're going to do that's going to get you in that top 1%? And for most people, they're probably better off taking a hard look at themselves and saying, probably I don't have it right now, and I'm never going to be competitive on that because this is just not my thing. And so if I'm going to continue to do this, I either need to accept that I'm going to continue to lose, or just trade it on sim, or, you know, wait for the right moment and maybe I'll get lucky and then I can put my money at risk and make it, you know. Or you're going to just have to like really buckle down and acquire some skills and so forth that really gives you an edge. One that I'm willing to share with you guys right now, because there's only like, I don't want like the whole internet doing this, but market microstructure, man. There's so much you can learn about market microstructure that will give you a leg up on the majority of retail traders because they just don't look at that stuff. What do you expect from someone who loves Biden? Nothing in particular. Are you talking about in regards to day trading? I don't think that there is really anything all that special about the way that a Republican or a Democrat works that would make one better or worse at trading. The thing that I do see a lot is that a lot of people really, I mean, trading is a political activity. You got to realize it is. Oh, who is it? Oh no, it's not. Well, I don't think it's Salim, but I think that that guy that I muted yesterday was Salim. That's why I was like, I just telling you, warning you guys straight up. Like, if I don't like you, it's probably because you're behaving like Salim did. That's why I booted him. Oh man. Oh, is it Sunday? He does talk like Sunday Driver, and we haven't seen Sunday in a while. Maybe it is him. Oh, man. I watched a great video where a guy said that the only data you need to show that we are in a bubble is that people are shilling Robinhood on TikTok. Well, you know, maybe it's just a contrarian in me. Yeah, and him and Ace were always arguing about God. You might be right. You might be right. So I'm just thinking about what Will said, and maybe it's just the contrarian in me, but I don't think that the amount of public popularity that you're seeing in something in and of itself it necessarily means that we're in a bubble. I think that it is probably the most common and strongest signal that we are in a bubble. But I do believe that it is possible for the wider public to be interested in investing and involved, and there not actually be a bubble. Right. So, and when it comes to stocks, I'm just not sure were there, to be honest. I mean, I see a lot of people involved in it and everything, but I just don't see the drop. So like when I look at Bitcoin and it gets up to this level, with the amount of speculation that is in it, I can look at it and I can say, you come back to this chart, well, they've been going through here and they had a pretty good move up here and a decline, and then they did the move up here again, and so maybe it turns back down. Maybe it turns back down like that. Okay, but then they could just go back and forth in this range for a while, right? But if they start getting past this point and this point, all of a sudden it's like everybody that bought up here is long and trapped. And the situation is such that they won't take the losses, very well, and they're just going to get demolished, And, when we're in what I think is a bubble, I can see that. It's like, once you get past this point, like the whole, there's almost no choice, but the whole thing unwinds. This is the same thing over here in GameStop. If I come out to a 30-minute here, when we caught this right here, when we came back up, it was like, yeah, but, once we get below like 200, 100, so like the bottom of this thing, yeah, they're gonna have to bail. And you get this trend that just like nobody can withstand. It's just impossible. Oh, okay. It was him. Well, you know what? He's improved a little bit. He wasn't nearly as crazy. So then does that mean that the other crazy person that I removed the other day was some other idiot? Man. He does have commitment. I don't know why he keeps coming back. He must be really bored. And like the thing is there's larger channels that he could go and harass too. I don't know. Whatever. I guess there are a couple of things that he did say that probably should have tipped us off. Yeah. Maybe it's all the same guy. Maybe it was him doing 2 accounts. But, I don't know. Larger channels, that might be true. Maybe that's it. Anyways, I don't know. It'll just come all out. So then, if I come back, let's return this to a 5-minute chart first. So then we come over here to the S&P 500 on a daily chart. Where is it? Yeah, right here. Okay. So does that same thing exist over here? Oh man, if we get past this low right here at 3,700, things are going to be awfully, scary. No. You have a really big base of support here, and here, right? And here. So you would really need a real change in the economy. Of course, when it turns down, it'll turn down very quickly. But would it be an 80% drop? Probably not. Oh, don't Uzi, don't give away your trade craft. Don't give away your trade craft. Wait. Remove that one. I'll remove it for you, so that we don't want to give away our trade craft, right? Was the same thing with some of the scammers that always coming by. There are certain things that they do that I know almost immediately that it's them, and I keep banning them, and and I'm like, when is he gonna figure it out? It's funny. But since he has no clue what the things are that we look for, I could write like a whole guide, but he doesn't know what to look for, so he'll always fall victim to it. I guess the big difference from the .com bubble to this is that the companies now are actually worth something. Yeah. Well, it's like there are reasons that the things that are happening for sure. It's still comes down to a fundamental question of like, in this situation, which is really quite unprecedented, how do you actually value things? And there's so much money coming into the market, and that dynamic's not going to change anytime soon. So like, if the S&P 500 really is in a bubble, it's a bubble that could continue for 10 years. You know what I mean? And I just go back and I think after the 2008 crisis, I remember in 2009, Obama's president, we just had this crazy decline, the first few months of Obama's presidency. And then it came back up, and that move was really strong. And immediately people were saying we're in a bubble. And they were like, they're going to do quantitative easing. That means that we're in a bubble, and the bubble's going to pop. And people were doomsayers the whole way up. And then finally things really, just before the pandemic, the markets were getting particularly crazy. And then we had the pandemic. So you're thinking like, oh, okay, that was the top. That was like the speculative bubble, and it comes down. No, I don't think so anymore, because as soon as that came down and we started moving up again, you started seeing that same action, and a lot of it was like SoftBank and all of this sort of a stuff. You know what I mean? No. So what would my alternative theory be? And this is where it kind of gets complicated. But when you make a trade, you have an impact on the market. And having an impact on the market, I suppose, is good, because you get into a trade and then it can attract attention, and then other people will try and get in that trade, and it will go up. But if you don't get something else to come in, like another really big player coming in and like confirming fundamentals and like an actual predictive signal to get in, then when you get out, because of what we call the sign change, which is when large orders go from buying to selling, those big orders have a larger impact because of the sign change. And so you will have an impact as you sell, and that impact will be greater than the impact when you buy in. And so in net, you actually lose money unless, there was actually a predictive signal that moved it up more than what your execution impact would be. Well, what is happening is that people are using their execution impact, and they are doing everything they can to outsize it using options. So they use options to magnify their execution impact. And then because the security moves up because of their execution impact, that gives them more margin to work with, and so they can buy more. And that allows them to keep pushing it over and over and over again. And it is essentially a unacknowledged inefficiency in the mark-to-market rules, because the mark-to-market rules come out and they say, well, you've developed this much profits in this particular position by the end of the day, so that means you can use this much margin. But the reality is that you don't actually have that much in profits baked in, because if you sell, you're going to have an impact on it, and it's not going to be as much. And that is what I think is happening, is that people are taking advantage of this inefficiency in the options. Now, when you do this sort of a thing, this is where the expiration becomes such a big thing, because you don't have to really do your exit strategy per se if you get to expiration and everything is in the money, right? Then you just get the money from the contracts expiring, right? But every once in a while, like what happened with GameStop, when it actually does turn the other way on you, then you have to face the impact of your exit, and it is crazy ugly. And so that is why we continue to see these situations where you'll see really crazy volatile moves up and down in between periods of extremely low volatility. And until the regulators figure it out and plug this hole, or the larger market realizes what's going on and adjusts to it, I think that you'll continue to see it. My idea is that we are in an age of growing volatility because of things like options traders being so prominent. Like, I want to just invest in the VIX and call it a day or something. Well, the issue with that one, Keller, not that you're wrong, but there's another force going on out here, right? And that is the Federal Reserve. And what the Federal Reserve is out there doing, and what the fiscal stimulus is out there is doing, really strangles, and I really mean the word strangle. It really strangles volatility, man. And you know, that periods of really low volatility where like the VIX is like pushing 16 and stuff like that. I think that we're going to see a lot of that over the next few years. Of course, it's inevitable that some sort of crisis or challenge is going to come up to the Biden administration where the media can no longer kind of like pretend that everything's hunky-dory and that there's no actual political news to report on. So right now there actually is a good deal of political news, but the media doesn't really make a big deal out of it. Actually, quite frankly, for a long time with just Donald Trump, there was a lot of situations where there was political news out there and everybody was getting uppity about it, but it didn't really have a real impact on anybody. It was just, and they were getting uppity for the sake of getting people uppity over the election, probably. That's not like a conspiracy theory per se. That's just the way that the cycle goes, right? You're gonna try along after that move? See, this is the thing. By the way, I was wondering how well did you make out yesterday? Because you took a good number of trades, but then you got that big one, and it was like that's what you needed, and then you were done. I would think it would do the opposite, because with everyone basically betting on whether the Fed will or won't do a stimulus more and more regularly, I think that adds confusion. No, I don't think that's that question at all. Always says it's been a rough week. Might as well. Okay. I was going to say this week would be difficult. This week would be difficult. I'm just wondering, because this is one of those spots. So explain to me, why do you want to go long there? Because this is a spot where I don't think where it was not what I would have expected you to say. I mean, like, I guess we're kind of up over the past 5 minutes, but man, I mean, we had a big decline before that. But you always seem to be like, you get it well. So this is one of those situations where you can look at it and you can be like, okay, well, what is it that actually makes me think this can be long? Anyways, to what Keller was saying. No, because there's not really any question as to whether or not what the Federal Reserve will do. Powell has made it like incredibly clear that he's not even thinking about raising rates. My CME guy texted me, said to go long. Okay. anyways, there's going to be like, disagreements on the edges and question, there is still this thing that like maybe the Federal Reserve will be forced to raise rates if they let inflation run above their target, and we get 3% inflation, but then it gets out of control, right? But that's so far off at the moment. Even if that was to happen, the soonest that could happen would maybe be like this fall. So, the market has a high degree of certainty in terms of monetary policy, and low rates, which really favors risk. And you have a political situation right now that favors gridlock, but also, means that you don't get a whole lot of interesting news to trade off of anyways. Then, so I think that the overall pressure, and it is certainly what you have seen this past week, is that volatility will decline. We had that rise in volatility because of the whole GameStop thing, and then it goes back down, right? So that's what you're going to see. I mean, that's what we've seen always, but you're going to see volatility is low, and you're going to see a little spike. It used to be like you get this, and then it'd be like forever. And I don't think we're going to see those as much, unless there's like a true crisis. And I'm not really sure where that would come from. But when the true crisis comes, it's never where we think it's going to be, right? We're talking about the possibility of there being economic trouble in 2020 and things like this, but that wasn't what any of them thought it was going to be, Nobody said, oh, there's going to be a pandemic. Okay, well, I'm wondering, have any of my robots taken trades today? No, they haven't. Let's see here. Spot Gamma TSLA options position is heavy at $800. 30% of total Gamma expires today. Second largest level is 850. And where are they right now? They are at 802. Well, guess where the Gamma is in the S&P 500? It's 3,900. So this is where I'm saying, like, for today, because it's a 3-day weekend. Ace, you need to go get vaccinated so we can get together. We could get together this weekend. You come up, help me watch the baby. Oh, that's a good question, Ace. So he has NinjaTrader and he has CQG, but he can't get any stocks to load up. So what do you use for that? So you got out of that trade. Okay.
Reaches 7-day incidence of below 35 per 1,000.
I don't want to catch autism.
We can further loosen restrictions.
I mean, I'm 100% confident that you could come over and that you guys won't catch COVID. I am for at least until the end of the spring. I am immune, and we don't have it. Okay, so when you come into connections, there is kinetic end of day free. I don't know. I don't think that it actually like lights up when you connect to it. Hold on a second. Let me just check something here. I come into this. Yeah, okay. So you kind of have to like you have to be disconnected from it to do the. Okay, so it can come in, configure, end of day. You can get this one. There's not really anything to do on it, but you can sell it to connect on startup. Okay. So now I'm connected to the end of day free. And then I should be able to come in here and do like TSLA stock. I'll pull the stock up. Now, I don't believe that it will let me see intraday data, that kinetic. It's only end of day. So, but if I change it to a daily chart, it should load it for me. Right? Daddy needs to work right now. All right, I'll catch you later. Oh, you're going out of town. Well, that sounds fun. I don't know what I'm going to do. It's me and the baby. I'm sure my parents will come over too, but I was hoping, did I tell you guys, I got this like, here, I'll show you.
Fed's 2021 stress test subject banks to severe downturn.
So I finally got the stuff to make the scrolling LED board, right? So here's the power supply that I got. It's a big power supply that you can connect all the LEDs to. And then I got a really nice soldering. I haven't even taken it out of the box. Take it out of the box here. Really nice soldering iron. Oh, when you pick that up, it feels so cheap.
ASO says
we a nice soldering iron with the dial and everything.
Contained.
So you can change the temperature. And I also got like some boards, but the LEDs aren't here yet.
I've not been stingy in procurement.
I got the LEDs from China. So, yeah. I got them on, what is it called? AliExpress. So, that means maybe it might take a few weeks. I'm just going to put that back in the box. So I was kind of hoping that maybe I'd be able to do that, but I guess it'll just be playing with the baby.
Germany's Chancellor Merkel says we've ordered enough vaccine shots.
Okay, well, S&P is still pretty tight. I'm thinking that what this is going to turn into is we'll get the open and maybe we can make a small play long, and then that'll probably be it. You got to keep those Chinese kids employed. I'm be interested to see what the quality of the LED strips are, but I'm pretty sure that everybody that's distributing those they're coming from the same factory. So it should be interesting. I have never done anything even remotely close to this. I'm hoping to do more like it in the future, but I've never done anything even remotely close to this. And then my Arduino hasn't come yet. That's the one thing that I'm like, I would have, because I ordered that from them directly.
Germany's Merkel says
I would have thought that would be here by now.
50 on March 1st.
John Williams tweeting back to me. It took me a long time to realize this. My biggest losses have come from trading away from my desktop setup. Really? I tell you what, being comfortable. Oh, you can hear the UK voice. We need to turn him off. Sorry. Did we have him on all day yesterday? But now you're coming back and you're thinking short? You're already back, Ace? Well, let's see if we get let's change this up a little bit. I can change this display to only show the 4 least significant digits. And hopefully that will... Okay. And hopefully that will allow us to see the timing better. Looks like we are getting some big orders, but just not a lot. No, leave him on. Nope. If you want to listen to him, you need to. Well, you can go to Financial Juice and you'll listen to him, and it's like a few minutes delayed, or you pay the $70 a month. The British accent is great, though, isn't it? Yesterday was great. Well, do you think that there's going to be another big sell today? The thing is that because we didn't see news on any of those, I'm starting to think that somebody must just be liquidating, which means that it could maybe happen again today. I think maybe we were talking about the effects of stimulus on volatility in a different time frame. Yours more immediate and mine more long term. Would you agree? Because no, I wouldn't actually. So the reason why I'm saying what I am is because this was really what it was the case at the beginning of Donald Trump's term. So a lot of us don't think about that a whole lot anymore because there was the trade war thing, and that was like a big deal. And there was like the Federal Reserve policy mistake and December 2018, 2019, and that was a big deal. The trade war thing didn't end until the end of 2019, and then you had that pandemic. So we have just come out of a period of extended volatility. But that first year of Donald Trump's presidency, man, it was so bad. I was basically sitting here and looking at it and being like, you know what? Maybe I just missed it. Maybe the opportunities to really trade trends are gone, and the market is now forever low volatility, and trading will be difficult from here on out, and this and that. Like that 2016 and 2017 in particular were so difficult for me because I so very much like to see things just continue. And it turned into everything was range bound, and every time that I would see a move that made me get, oh, okay, I can maybe try and continue with this, it would turn around right there, What first attracted me to your room was that Squawk Box. I figured you could pay for it. I would get it free. I came in for the free news. I stayed for your rugged face. No, when you first came in, I don't think we had the Squawk. But it was a nice story nonetheless. Although we are committed to stimulus with JPAL, in the future we might not, and there's always a question of if we will or if we won't, making people second guess themselves. Yeah, but the thing is that what has been the case for the past, my entire trading life is that something always happens and they're never able to take it off. Like this whole thing where like they reduce rate or they increase rates and the market freaks out. Like, yeah, it did happen in 2016. And that's what they call the taper tantrum. But when you really look at it, it wasn't a big deal. Oh, the first day I was ranting on Mia Love, was it? Yeah, it must have been me talking because I really like her. And she's been so nice to me. We used to work on her campaign. but she just didn't make very good strategic decisions on a few things. I don't know. Those kinds of things here in Utah are really kind of interesting because I tell you what, it doesn't matter who they are. There is a very strong contingent of very, very liberal people in Salt Lake City, and they just hate every Republican no matter what it is that they're doing. So in my mind, Mia Love was just like a perfect angel, and they're all like, she's so extreme and awful and all of these things. And then the Donald Trump supporters are like, well, she won't support Donald Trump, so screw her. And that's why she lost. She would still be in Congress if she had done even the minimum. I don't know, man. Like, that's the thing is, do we really know what she was doing in Congress? I think sometimes we think like, oh, if they're not there in front of the cameras and leading, the panel and or their bill is the bill that is everybody is supporting and that they wrote, that they're not doing anything. But even in Congress, not everybody's job is to be the leader. Some people have to just read what the bills are and vote and be really good at making those decisions. And that's hard to analyze because we don't have as much information about those bills as they do. I get what you mean in the sense that injected money makes it easier for the market to stay at highs because everyone can keep doing more, like a metaphorical Botox economy. Right. But and it gives them a high degree of certainty about what the future financial conditions are going to be to make long-term investments as well. So that's another part of it, right? And then there's this other issue, which is that what we've seen so far, at least, is that low rates seems to lead to more low rates. And low volatility seems to lead to more low volatility. Can you imagine how scary that would have been for her to be there on Insurrection Day? My heart. I don't know. Well, I really feel that a lot of people are exaggerating what happened, to be honest with you. Like, there was that video where they like rushed Mitt Romney out away from the crowd. So if security hadn't have come and done that, would that mob have lynched Mitt Romney and killed him? No. They wouldn't. You know what they would have done? They would have stood around him and yelled at him. Nothing would have happened. You know how I know that? Because if it was really an insurrection, that mob would have just killed people. Okay? There's a guard in the way. Guard shoots somebody, you don't just go, oh, why did you shoot this guy? This is so bad and all so bad and they're still standing. No, if it's a real insurrection, they just fired the first shot. You charge them, you kill them, everybody there in the Congress, you get rid of them. That's what, I'm not saying that that's what people should do, but if that's what it really was, that's what they would have done. And that's what happens when there has been communist revolutions. That's what happened when they overthrew the Russian government to some extent. It was extreme, yes, but they weren't going to overthrow the government. They weren't. It straight up wasn't going to happen. And all of these people coming out and saying that it was an insurrection are full of shit, frankly. They're exaggerating a situation for political advantage, just like always. But I say if it was really an insurrection, that the crowd would have just started killing people. So would it have been scary? I guess maybe for the senators that were there, maybe they were scared. But if I was there, I wouldn't have been scared, right? Like if I was there, I would have, and the Secret Service is like, okay, we need to get you away from here. I'd be like, nope, I would go, I'm going to talk to the crowd and be like, okay, like, I understand that you guys are upset, but what you're doing right now is illegal. You can't be in here, and let's go back out and protest peacefully outside. And I would have zero zero reservations doing that. And I would not be afraid for my life in the slightest. Just because they were incompetent doesn't mean it wasn't an insurrection. Do you think Mike Pence would have walked away unscathed? Yes, I do. I do. Even though that apparently that group really, really dislikes him right now, I don't think that they would have killed him. No. You can't tell me what you would. Well, I suppose not, but I really tend not to be afraid of those sorts of things. Now, if it was like an Antifa mob, right? Those people kind of scare me because they'll like hit you from behind and stuff, right? You're underestimating the power of the mob, but here again, if that's what they were going to do, why didn't they do it? There was so many opportunities for the mob to have actually committed real violence, and they didn't. And quite frankly, they were given every reason to be agitated and move into violence. If this had been almost any other situation, a person being shot by the police would have led to the whole situation completely exploding out of control and there being a full-on insurrection. And it didn't happen. They just sat there. It was, I'm sorry, but it wasn't an insurrection. It was a bunch of boomers that were protesting inside of the Capitol, as has happened many, many times in the past, as happened when Brett Kavanaugh was being confirmed, and there was hearings on that, and far left protesters broke into the Capitol complex and were protesting outside of the senators' offices. And it was not, nothing was going to happen. I avoided talking about mobs, riots, and violence all of 2020. Well, it was happening in cities across America, but the Capitol riot absolutely disgusting. Well, so it being in the Capitol is a key difference there that does make it a little bit more serious, right? Whereas the impractical evidence to support such absurdity, well, that's the issue once you really start to get into especially political and history theory, is we can't go back and replay the situation multiple times with different theories about what would have happened if X thing. I'm just saying that, okay, like in the 60s or 70s, for instance, there was a far left organization broke into the Capitol, actually shot somebody, and then later Jimmy Carter pardoned them, and people believe that was a deal with Cuba to get some of our people back or something like that. But that they had every opportunity to be truly violent once they got into the Capitol, and they didn't. I mean, they caused property damage. They tried to break in, but they weren't going to kill anybody, guys. They weren't. I watched people die on Riot live streams. A bunch of boomers storming the Capitol, which I also watched, was on dozens of simultaneous streams and was tame as hell by comparison. I didn't need CNN to give me context about the Kenosha shooting. I watched it happen live. Right? I mean, I'm totally with you on that one, Uzi. But I would, hesitant to kind of take that kind of stance or attitude, because like, violence is violence. Illegal behavior is illegal behavior. And I don't think that we should condone illegal behavior. This whole thing that people were saying during the Black Lives Matters riots, for instance, that like, well, people are frustrated, so it's okay for them to act out and things like that. Well, you could say the same thing for the Republicans, but I'm not going to say that because I don't think it's okay. Right? Like, I think that we're still a nation of laws. And until you get to the point that, I mean, sure, maybe there is a point at which you can support revolution, but we have never been anywhere even remotely close to that, you know? And so trespassing into the Capitol is illegal, and they all knew it. They all knew it. I don't think, though, that it is so serious of a thing that a protester needed to be shot. I frankly, I think that the use of force by that police officer was excessive and that he should be punished for it. And I don't believe that any senator's life was really, truly at risk. And again, if it really was, then the mob would have acted as though their intention was to kill people, and they didn't. They just kind of like, they got inside and then they kind of stood around. It's not that one side is right and one side is wrong, but these people who are all disgusted by the DC stuff but completely ignore half of what happened in 2020 are hypocrites. Well, like I said, people are trying to push things for political advantage. Happens. It happens. I mean, really, if we were to go back, my real opinion on this is that Donald Trump should have never have called that in the first place. Okay, the chances that anything was going to happen with the whole, you know, electors and all of that sort of stuff was a Hail Mary conspiracy theory that was never going to pass. Nobody in their right mind would single-handedly decertify the entire election like they thought that Mike Pence was going to do. The whole thing was stupid. Donald Trump should never have called for people to come in there, not because it was like going to cause not because it had the potential to cause a riot or anything like that, but just because no matter what happens in the end on that, you're going to look stupid. And that's exactly what happened, was people went and misbehaved. And now it's given Democrats the excuse to run around and say that Republicans want to overthrow the whole country and they're so dangerous now. So now we live in this world where if you're a Republican, you're a threat to the Republic. I really think it's quite silly where we've come to. And then they're impeaching him over it because he said, okay, now go up to the Capitol peacefully and go and protest. It's just, the whole thing is ridiculous to me. That was a pretty good long run so far. Well, it seems like it on the chart at least. I'm sure that people were injured. I did see, you know, when there was like the crowds trying to push through them and stuff like that. But that again is like, you know, well, one thing for sure is, you know, that they're not communists, because the communists, they know what to do, right? Like, they know what to do. If this was a group of communists pushing into the Capitol and a protester got shot, that wouldn't be the end of it. They would start pushing through, right? That's exactly the situation that communists want to create. And here you're watching it. The thing happened that has been the overthrow of governments in the past, and everybody just kind of like, okay. They eventually left. You know, maybe if it had been the case that the police had to, you know, forcefully, you know, beat and shoot people to get them all out of it, and there was a big but it didn't happen like that. It was like somebody got shot, they're all like, oh, this is awful, and then they all left. You see, here's the real thing. Now I'm going to say, because of course we're talking about this, we're kind of treading on shaky ground, right? But I'll say the thing that's really truly controversial. Do you want to know the truly controversial thing, at least that I think is truly controversial? Do you know why liberals hate Donald Trump so much? Why does the left hate Donald Trump so much? Because really, in my mind, I think that a lot of the emotional reaction to him is so incredibly overly emotional and illogical. Why? Because they see themselves. It's because they see themselves. They see somebody that is willing to do whatever it takes to win. And they know that if they were in that situation and a protester had just been shot, that they would have gone and created all-out havoc and actually overthrown the government. And that's why they're so upset, because they see themselves. My opinion, just an opinion. Not stating a fact, but Trump also went hysterical on the election results. So, yeah, I totally agree with you. Like, I'm mad that there wasn't more investigation into some of the election irregularities, and certainly that there wasn't the way that the legal precedents went in terms of them literally changing the election laws without the legislature. That's not what's supposed to happen. And we've now found that there was a pretty organized and concerted group of people that were making those things happen on purpose. Okay, but then the way that Donald Trump reacted to it, yeah, he was reading the internet way too much, man. And all these people come up with this long shot theory about how it could possibly work out. And these are people that aren't of sound mind anyways. And he totally bought into the theory and thought that they could make it work. And it was crazy. And he did dumb things because he believed in that crazy idea. Namely, calling to have a rally that day. Not, thinking that it would somehow be beneficial to his cause, when in the end, all it really did was make Donald Trump supporters look stupid. I hate Trump for his politics, but I don't think his politics are anything different from what Republican politics basically are anyways. But I like his way of speaking and not Democrat pro-clutching. That's funny. Well, I feel like I kind of missed the long. I didn't want to take it when I saw the absorption at 3906, but they didn't actually come back and get me. So now we're kind of in this situation where you see something that's going, and like, if I buy into it, that's probably exactly where it's going to turn back down. But if I don't get into it, it's going to just keep going. He lost me when he made fun of that reporter. That's funny. That one probably is a key point for a lot of people. But when I look at people on the Donald Trump side, that is the point at which a lot of people on the Donald Trump side started to say, oh, the media is full of crap. And I think justifiably so. For my wife in particular, that was the one that did it for her, because she went and she looked up everything about it, and she found out, oh, the reporter that they're talking about is, okay, he has a disability. He doesn't have a disability like, that was not the disability that he had. The disability is that he literally can't move, and he's very thin and frail. And so Donald Trump doing that sort of thing, he wasn't making fun of the disability at all. That's what he does when he makes fun of anybody. Oh, that's something that Salim does when I ban him, and then he puts a bunch of dislikes on the video, and then it boosts it in the algorithm, and we get more views. Well, you can make fun of people. Sorry, wait, is it wrong? I mean, I suppose that it's wrong to make fun of people overall. Like, it's not the nice thing to make fun of people, but like, people do it all the time. I don't understand why it's such an awful thing for Donald Trump to mock a person's response when that person was literally lying. Like that was the thing, is that man was literally lying to the whole country to his face, and he was caught in his lie, and was just frozen in his lie. It's funny. And then everybody said, well, they were making fun of his disability. No, they weren't. That's not what his disability is like. So I say the whole thing was a media concocted lie. It was total bullshit. They reported that Donald Trump made fun of a disabled reporter when the story should have been that a disabled reporter lied to the nation about what actually happened, in so much that he actually took the article off the internet retroactively to try and prevent people from being able to call him out on it. My opinion. See, we can get into this on a Friday because, it's a Friday, he's going to come in anyways, right? I can't believe you're trying to spin making fun of somebody into a good thing. Ace, I make fun of people on this stream all the time. And I believe that politicians can make fun of people when if somebody does something that's funny and worthy of mockery, the politician can make fun of them. Yeah. Now, if he had made fun of the reporter for his disability, that would have been inappropriate. If he had made fun of the disability, that would have been inappropriate. But that's not what happened. It's not that making fun of people is good. It's that censorship is dangerous. Well, I don't know what that means. What's your trading plan for the day? My trading plan for the day is that it is a Friday before a long 3-day weekend. There is not very strong news impetus. I took maybe one trade on the open that I didn't get filled, and so I'm probably not going to take any more trades, because if you do, the more likely thing to happen in this situation is to get chopped up. But we will continue to monitor it, of course. Did they have was that move right there in GameStop? Was that another one of those options being probably? That was probably just an option being, placed, executed or whatever. See, I look at this. It's well, they're not to the. Well, so a couple of things. There's still overnight high at 14. So I suppose there could be some more upside. It's just I can't. This spot, I can't. It'll probably keep going, but I know that the risk of it coming back on me when I buy it in that location is pretty high. So. Pastafarianism is the ultimate example of this. Is irreverent and makes a mockery of religion, but it's an important political statement. Blasphemy laws are bad. Yeah, he's feeling the same thing in ZB, right? Well, in ZB though, the annoying thing about the treasuries is the way that they will just go all at once, right? It's the flow will come in and the bids will decide to pull and they'll just go through it on nothing. And there's how do you know that it's going to do that? It's Blunt believes that because the market is moving, that means that there's opportunity, but that's false. I'm going to argue with you on this one because I think it's an important point. There are times when there is less opportunity in the market. And if you start over trading, those are going to be the points in which, you can make the biggest mistakes. And I would know, because if you go back and you watch this stream and you watch like the earlier years when we started doing this in 2016, 2017, those were the worst days. So no, just because the market moves doesn't necessarily mean that there was an opportunity for you. And here in this market in particular, you've got a really slow moving trending market. And we know that if I try and buy the high at 39.09, that there's enough of a possibility of a 2-point pullback that that's not a good trade. Like the other day while you were longing into a doji. Did I long into a doji? You know what? I really don't give a... I really, literally don't care if it's a doji, to be honest with you. So here again, what empirical evidence do you have that that's a bad trade? Do you actually know? Have you actually done the stats on a doji? Have you actually done the stats on it? Let's do that. Let's see. I think we can do the stats on that. Let's look. Let's go. Let's see here. Okay. We will come in here, and I think that it is called candlestick strat. And then I can come in here and this doji. Yep. We'll tell it to go long when we get the doji. Well, I mean, we'll take it as a continuation. Go along means a continuation. I kind of named that wrong. Strength, we will put as 0, which means anytime that it happens, we'll do something. And we'll have equal risk reward. We will trade it on the S&P 500 on a 1-minute chart. And we will go back and we will go to as far back as we can go. So let's see if it will let us go to 2008. The first. I think that is the one we want. We'll use the instrument settings and we'll include the commissions. Okay. And we'll run that. What about a Doge? This might take a while because we'll have to download the data, right? When you have a small body with a little wick, you have a little range up or down. That's how you get chopped. How do you know that it's going to be a doji? How do you know that it's not going to break out at that point and it's going to turn into an extension bar? Like if we're doing it into a doji, that means that like that current bar at that time is a doji. The bar isn't even finished. So that's the first thing you're saying about that. That's not right. Is it's not actually a doji until the bar closes. Okay, so if we just had a doji and you get in, and you're saying that you have little range up or down, well, sometimes it will break out and sometimes it won't. I think we'll see. We'll come in, we'll look at the stats and we'll see what it says. You're sharing heuristics from commonly shared technical analysis that have zero empirical evidence backing. And what you're going to see here when we do this back test is that it literally means nothing. Like there is literally no predictive value to it. Okay, so if you take it long, well, so now that's interesting here. How did we get pattern, stop, target? Now hold on a second. Do I have a little mistake in here? Because it shouldn't be losing more on the losers here. It is on the ES. Okay. That's kind of interesting. I've never run it on the doji in particular. No, it always does that. So hold on. Maybe. Nice song. You haven't heard that? You've been here on the stream when we've done that. Oh, you know what? It's not gonna let me see the. Is it? No. Well, I don't know why it's being slow. Maybe it's just because there's so long. Yeah, it is. Okay. Close. It's just closed position. So I wonder if that's closed position. There must be something wrong with that. Oh, and all of these are like 2008. So if I come here to the analysis part here, yeah, that's just dismal, isn't it? Just look at the trading range for the day you were trading. Simple. Okay. So then we break the high of the day and then it looks completely different. Right? This is the thing that I think is so funny about like the confirmation bias in technical analysis, man. Like, here, look, okay, here's today's bar. Okay. And here was yesterday or something like that, right? And yesterday was like this. We go, let's redraw it. Hold on. You can get this one. I just want this other one to look more like a doji. Oh, guys, we had a doji. We have a doji. Oh, except for the day's not over. The day actually ended up looking like this. Oh, wait, hold on. Right? Do you even know how to read candlestick patterns? Here's what I know. I've gone through and programmatically created every candlestick pattern you can think of. Over 30 candlestick patterns that you get in NinjaTrader, and I ran extensive backtests on all of them over a 10-year period, and none of them had any predictive value. So you clearly think that they do, but that's why my question is, what empirical evidence do you have that they work? Oh, I'm gonna read this guy. Okay. Yeah, but what about the secret pattern? The thing is that it's not even like you're just doing it wrong. I've gone. That's why I have that go long thing and the strength thing on it too, is because I can come in here and I can say, on this strategy analyzer, let's bring it back. I do need to look into why some of those are being closed, but I think that the reason some of those are being closed is because the dojis happen at like the end of the day or something like that. But on a 1-minute chart anyways. But here I can do the optimization for it, right? And then I can go into my candlestick strategy, right? Are you watching? Like, are you looking at the screen? Okay, so I can say, I want to take it as a continuation or as a reversal. So I can optimize that so I can try it both ways. I can change the strength of it, and this is how strong the trend was going into the bar. So I can say just anytime that it happens, or I need to have a certain amount of trend in order to take it. And I can change my stop and target so that I can, test maybe a certain strategy. You need to have a larger stop for it to be able to work. Or maybe in order for it to work, you have to catch, a good runner, and so you need a better risk reward. So we can try all of those, right? And then here in the pattern, here are all of the candlestick patterns that we can try, right? And I can go through, and I've literally done studies. I won't do it right now because if I really went through all of the iterations that you can do, it would probably take an hour for it to run. But literally every iteration of a strategy that you can take off of an individual candlestick bar, and none of them show consistent predictive value. None of them. We're going to do a video about it at some point, but that's like 3 or 4 videos away. I could bring that one in closer if we wanted. And you think that because some guy wrote a book and says that they have a predictive value that they do, but here again, I would say, what empirical evidence do you have that those are useful? Because here's the thing. When I take these trades, I don't explain to you guys why, but I have reasons why I think that it's going to move my way off of that. Because I've back tested these things and I understand certain things about the market and the tendencies about what is likely to happen over long periods of time because I've back tested it. And there are other things that I've back tested and I find don't matter. And dojis is one of them. Dojis represent continuation or reversals that need to be confirmed, but they need to be confirmed. Oh yeah, okay. So then you have to be like, oh, okay, you get the signal, but when you don't get the signal, it's when you get the signal after that. But then we could go and we could say, okay, what would be a confirmation that the next bar breaks above the top of the doji? We could go and we could program that, but I can almost guarantee you that the trade would still be unprofitable over a 10-year period. Boston Federal Reserve showed empirical evidence that market cycles are slower during times of sunspot reduction. Should I start trading sunspots? Well, so now you're asking a very good question, AGOGE. That's an insightful question. And I don't know if you asked that because you think you know why, or if that's just like an honest poke at what the strategy is. But here's what I would say. You can go and you can look at the market and you can data mine it. And there are a lot of studies about data mining the markets, right? You try a bunch of different random stuff and you have the program combine together different things that it can see and different types of analysis over thousands and thousands of iterations in the hopes that you find something that has a good expectancy. And then you take that and you train it over data set and you forward test it and you see what it works. And the strategies that, the studies that I have seen that have done that, their general conclusion was that data snooping is not effective in trading. That you'll do that and maybe you might find one or two after all of that that will maybe work, and even then it's really questionable how effective it's going to be going into the future. So I would say that if you have a technical strategy that appears to work, but you don't actually know why it works, then I think you should be very wary about it. On the other hand, if you have a strategy that is based on actual properties of the market. Okay, so for instance, I will give you one. Okay. Wait, okay. Yeah, it's fine. I'm going to give you one because this is well known. All right. And I've mentioned it many times. I've mentioned it today, right? When you have a large meta order going one direction, it has a market impact and moves the market. When you get a large meta order going the opposite direction, it has a stronger effect. And that is due to mathematical properties of limit order books. People have actually gone through and have created models that explain this behavior. That's not necessarily proof that that's why it happens per se, but once you're able to get a model that can mathematically show why that behavior happens, and that model matches up with what the actual observed behavior in that instrument is, that generally means that you have a pretty good thing there to base your trading off of, right? So that is a real market inefficiency that you can try and take advantage of. Now, because it's known, there's competition for it. But that is a real thing. And that is not data snooping, right? That is looking at the mathematics of it and saying, okay, well, this is what we think how the system works, and here are the participants and stuff, and when we go and we put it in with those rules and we go and we do the math, this is what we come out about how, the expected values of certain things, and they show why that sign change happens, right? But to the original question, if they showed that you could trade off of moon phases, should you use that? Only if you're able to find some sort of explanation as to why that actually affects the market. Like, what is the actual mechanism that causes that to happen, and not just data snooping it. So I'm glad you asked that question. I hope that was a satisfactory answer, because I thought that was a pretty good challenge to what I was saying. Aquarius meets 6 planets this month. You remember everybody was making a big deal about the conjunction. I saw so many conspiracy theories about what was going to happen during the conjunction, and then it kind of came and went, and I didn't even remember a whole lot of people saying much about it, actually. Anyways, I'm still kind of waiting for him to be like, well, you need to do this, this, and this, and then we can program it. But now, if you would like, I'll give you another thing. For the patterns, I have noticed, like I said, the candlestick patterns don't have a consistent predictive value, but they do kind of cycle. And over the past year, at least, it's been those hammers. It's been those inverse hammers that worked the best. Yeah. So you'll see this. Maybe just look. I bet you'll probably start seeing it now all of a sudden. So a hammer is like, it's a really big tail, but it's concentrated over to one side. So that means that, like, it started here, it went up really big, but then it came back like that. And what my backtesting says is that it tends to do this afterwards. And that's been the most predictive candle pattern in the past year, 2 years. Well, they had a little bit of a pullback. They're still kind of pressing the upside here. It does look like the treasuries are going to come all the way down to that spot that we identified earlier as the lows from earlier. Oh, why do I have that open? What price is it exactly? Oh, they broke it by 1 tick. It was 18.5. They've broken it by 1 tick. Below that, there's 16 and 14.5. I don't know if they'll get that far. Octavia says you have MBO data on Denali. So what is Denali? Is that like an exchange or something? It looks good, but it's not the Holy Grail. Now, I mean, so now that I understand a little bit more about some of the market making models that they use, I can see why they want to have the market by order data, because being able to see like which specific orders canceled helps. If you reading your position in the queue, if you can get a more accurate reading of where your position is in the queue, you can make a better decision about whether it's worth it to keep the order there or not. Sierra's, oh, it's on Sierra charts, huh? If I had the market by order data, the first thing that I would be doing is I would be looking for when you get a move that has more stop orders in it. Do stop orders have a larger market impact and market memory than regular orders? That's the first question that I would have. I don't know. I don't think that anybody's studied this, but remember we were saying like a meta order has a market impact, and a sign change has a larger market impact. And that also applies to like when you have a move, how long does the market remember it for? Because you get this thing where it's like, here's the initial impact of the large meta order, and then afterwards it kind of short-term regime change afterwards, and so there's this period that it actually is. I actually think that it's 2.5. So this is 1 and this is 2.5 is how long it takes. So it actually look more like this. Sure. Like that, right? This is 2.5 times that, right? So the question is, if we came up here and then we had a slight move down and there was more stop orders in that move, would that have a larger market impact? And would the market, would the memory effects of it be as long? Does it being a stop order change the way that the market behaves? I think theoretically, no. At least on memory, I think no. On impact, maybe. Because the orders would be more aggressive. Can you explain why the point of control revisits its point of origin frequently daily? This shows that volume cycles occur frequently. I would love to see stats on this. Yeah, I think I can actually. So when you get trading, okay, you're going to get this thing where, okay, say we have a bunch of people that want to buy. These are all the people that want to buy, right? And then we have a bunch of people that want to sell. These are all the people that want to sell, okay? This is the model that we have set up. And then, well, all of these people that are here in the middle, right, they're going to get matched. They're going to get matched, right? So because these people are already matched, it creates a vacuum like this. It creates an area where the latent liquidity in that location is lower than everywhere else. Okay. Now you would think, oh, well, that must be the places where, they don't trade very much. Wrong. Nah, because there's not the liquidity, it means that they'd get stuck there. So it's not so much that they really like that price all the time. It could be that really big trades happen there and stuff. Something that you will often see is 2 really big transactions will occur in that spot. Like as soon as it reaches there, like, this is probably a good example right here. There's a decent number of orders trading there. Well, Well, it's 6,000 over the whole session. It's 600 this time. Okay. So what's going to happen is, assuming that this doesn't break out and just push up higher, then you're going to end up with that liquidity trap. Like that, right? Because the people that wanted to execute there have already executed, and so there is less liquidity in that location. And so what does that lead to? If we start to move this way, then there's more buy side liquidity. If we try to move this way, then there's more sell side liquidity. And so they have no choice but to just transact here over and over again. And they might not necessarily want to, but if they really want to transact right now, that's where they have to do it. And that is why you end up with some of these spots that stick out on the volume profile. And if that is the case, then yeah, what you should expect to see happen is for them to come back, right? So how do we utilize that information? So I'm going to be watching right here. Okay, so I'm going to say the spot is like here. Okay. So when we start trading 10, 11, okay, so right here at 11, there was some very aggressive market orders came into the market, and I'm also seeing a lot of limit orders move around here on the offer. About how much? How big are they? 200 lots moving around on the offer, the order book. Okay, so they came out of the area, they were aggressive, but the liquidity was active in that location. So that means that if we're really going to have to break out right here, it's going to take a lot more than that. So if I wanted to take a short, if I was short biased, which I'm not, but if I was short biased, this is the spot that I would take it, because of that. That makes sense? So I don't have specific back tests on that setup overall. It's really complicated, and I'm not quite sure how I would program all of that analysis that I just did for you there, right? But there are models that kind of explain this behavior happening, and so that's why I use it in my analysis. Yeah. I like a pullback to 902.5. You can kind of see they traded into it, and things are kind of slowing down, and I think that some of the buyers are kind of starting to come to the realization that they might get stuck there, right? And then the problem that you have is, okay, like, look, they're getting sucked back into the hole. Okay. So now you get this saying, what if they decide to trade the other side of it? Right? So if they start trading the other side of this, and I start seeing that it doesn't take very much for them to trade into it, like bids are pulling, that's when I might aggressively hit into it with a market order on the expectation that these guys up here are going to have to puke down into that. And because it would be very much against the momentum, we get the sign change. So that's why I'm watching, right? We should watch that if bids start pulling down in this 08 area, we might take it for a short reversal. ES size has no problem sitting at this day top. Yeah. In this particular instance, probably there are a lot of, okay, so there's that. So there was an aggressive move there, but they're absorbing like 300. So that's pretty aggressive though. Well, I probably should have hit it up here. I think it's too late. And they did kind of push back on it. So I don't know if that was really quite what I was looking for. So now I'm looking at it. They're trading back and forth here a bit. It actually looks to me like I'm rethinking this. So remember I was saying that the hole is like right here, but it actually looks like there's another hole right here. Do you see it? And you can kind of see there's a point of control right there. Because they're trading back and forth here, but when you look at the number of contracts that they trade, at each step it's not a lot, and they go back and forth many times. You see? So it's like 100, and then it ticks down and it's 100. And then they go back, so there's a liquidity hole right here. So now that we know that, now we know, oh, okay, so you can probably, if we do get past this area, they're probably going to be a jump up to this one as well. So you kind of get this areas right here and here where they kind of slide through. Yeah. By the way, the treasuries pulled back like hardcore, didn't they? Oh, that was too slow. Hmm. I kind of missed the spot that I wanted to trade, but I'll show you why here in a second if this works out. You'll enjoy this. Well, some of you will. So that 39.10 is going to be a little stingy for us. Yeah. You see how when they cleared it, somebody immediately hit back. It's an iceberg there. 39.10. In this particular instance, they're probably going to break it, but should just be like finger on the trigger just in case. It seems like there's enough buy-side demand that nope, not that time. Yes, another try to go higher. We'll see if those sellers are serious. I mean, that's I would expect that 39.10 is probably some profit taking. Just given the situation, what do you think's more likely? You know what I mean? Especially since it's like at an even number and everything. Or it might just be a hedge. That's another thing, is that because it's an iceberg and it's in the E-mini, it's probably more likely to be a hedge. Right there, though, you can still kind of see. So I'm willing to give it a little bit more of a try. But you know, because we were able to read the liquidity, right? We were able to get a pretty good trade that didn't come against us very well. Now let's come back and look at the chart. Let's come back and look at the chart. What happened? Oh, look, there's a doji. Should you buy it? That doji? Maybe. Inverse hammer. And then it went. But we didn't know that any of that was going to happen when we took the trade. We took it all before that happened, right? Okay, well. Probably should have taken it off right there. But here again, you get this situation where it's like, okay, yeah, but if they touch it, then they're probably going through it. You know what I mean? I sort of tend to agree and disagree with Ace trades. I'm very skeptical of Wu, and personality type seems like something that is soft science enough that it could go either way. Well, I think the reason that Ace is getting into what he's saying is because there has been some studies on that, and they showed that it wasn't that useful. That particular one. A big iceberg there in the 10-year. On the bid, 20. Big iceberg there on the buy side in the E-mini too. So that's good, right? That means that the liquidity is there. And the liquidity is definitely there, right? So hopefully next time they come up to that 10, and I think he wants to be filled. Like, to be honest, he's probably profit taking. Like, why would he show that big order if he didn't want to be filled? Yeah. Although a lot of the retail traders, that'll scare them away. And the buyer's still there. Kind of taking a bit of a risk there. I don't know if I should. All right, well, let's scratch it. We don't want to be caught in the situation where the liquidity that we were getting here has been filled and then it slips through, right? I still think we got a pretty good chance that we'll break this at some point. But I wasn't necessarily taking that because I thought I had a really good trade, so much as it was that I was just pointing out, can you read the liquidity and make pretty good moves about what's going to happen there based off of it? I think that we did a pretty good job there in that situation, didn't we? We knew the areas that it was going to slip through at. So we knew, oh, it slipped through there and then it survived. So probably that liquidity is still there. They could probably slip back up to the other side, and they did. And if I had gotten in on the price that I had really wanted to, I think that we would have gotten it because we were only short one tick, right? But then the other thing is that we knew that 39.10 was going to be stingy before it even traded, didn't we? I said it right away. I was like, oh, that price is going to do the thing. There's going to be liquidity there. And sure enough, there was an iceberg. So then we kind of knew that, oh, well, we have to be careful and maybe we have to scratch it. I should have gotten out ahead of the iceberg instead. But if it was a more active market, I would have held on the expectation that it was going to go through. But here's where maybe what I just showed you is important, is that we're getting into a lower volatility market, right? Which means that it's going to be those kinds of reads that you can make in the S&P 500. You know, you're going to have a greater ability to make that kind of an analysis because it's not going to be whipping around all over the place, 20 ticks all the time like it usually is, right? We're going to go back to, an 8-tick winner is actually pretty good. Yep, and I did see that, the possibility of it coming down lower there, so I scratched it, and that was a good decision as well. I can confidently say that 90% of the time the point of control will be revisited daily. Volume cycles occur frequently is one of the best methods. I would say that that's probably true, but I would be a little careful with the second half of your statement, right? So, yeah, do point of controls get revisited often? Yes, because of the kind of the liquidity hole effect. At least that's my approach. But the problem is that, how do you use that in your trading? Can we use that right now and we can say, well, we've come away from that point of control, so we're going to come back up. I should buy it here because I know that we're going to come back up. Well, I kind of like some of that buying right there that we saw at 06, but they're extending down a little bit, so maybe. But at the moment, you're getting enough market orders and cumulative delta on the downside that I think you kind of have to be a little iffy about buying it here, right? So how do you know when it's actually going to return back to it? When you get stats like the problem is that when you get a stat like that, you might be able to show that a certain point is likely to be able to be visited, but you're probably not able to show that you can take that as a trade with a certain risk and reward. You get what I mean? So that's why, Probably an easier example of this are the stats that Futures Trader 71 tends to talk about a lot, right? So I think that a lot of retail traders misread how you use an edge like that. So we can come in and we can say 80% of the time, I think it is, the overnight high and overnight low are taken out. That would be a very relevant stat right now. The overnight high was 39.14. The overnight low was 38.90. We have an 80% chance of breaking the high or the low. Okay? Yes, that's true, and that is an edge, and it is definitely something that you should look at. But can you does that stat doesn't say that we have an 80% chance of breaking the high and that you can take it right here without it going 16 ticks against you and hitting your stop, right? That was kind of what I was looking for. I missed it while I was yapping. Urgh. Sure. No? Well, I'm not willing to take it higher than that. If it revisits the POC and holds, that's a bullish sign? How would you define that it left it? So you have to say if the point of control, if you move more than 8 ticks away from the point of control, then the condition triggers. And then at that point, when you reach the point of control again, you buy it there, and that there is a certain percentage chance that it will push higher. We could probably test it that way. That would be a worthwhile back test. We'll do that. So I tell you what, on Monday. Oh, what did I do? Oh yeah, I did make that indicator that showed you where the steps in the profile were, and we tried some trades off of that, and it actually kind of showed that there's something to those spots, but that it didn't seem like it was enough to trade off of. You remember that? So if you come back on Monday, because I'm not going to take any trades on Monday, but I still like to wake up early, keep my schedule. So it's a holiday on Monday. We'll come in and we'll program that one. We'll program the revisit the POC. That it will tend to continue. So I think what we're saying is, here is the volume profile. Here is the point POC. Here is, let's say that this is 8 ticks away from the POC. So if it goes 8 ticks away from the POC and then comes back to the POC, then we'll enter. And we could probably try a couple of different things. Like we could try entering here, or we could try entering here, and then trying to hold like a 16 tick risk reward and see if there's a good probability of that working out. That sounds like a viable one. Yeah, see, I really... So when they came back and they held the liquidity there, I was like, yeah, I want to see if they snap back. And I was yapping, and so I didn't click in it. And then I was still worried about that 10. So I said, well, I'm not willing to take it any higher than 2 points away from that. But I really could have just hit into it because it went. And look, do you think now that they're going to break the overnight high? Yeah. But the question is, at what point can you actually take that one, right? Because if you had taken it when we were at 38.10 the first time, you probably would have gotten stopped out before this happened, right? Anyways, it's okay because I don't really want to put risk on today anyways. So took one and I scratched it. It's fine. save my seat. I'll be back. Oh man. So let's try and analyze this new area again. And I'll try and show you something else because there's less viewers today. Okay. So the question now is, what is the profile going to look like again? So the thing that stands out to me immediately is there, and there. So I'm just I'm looking at where there were significant trades in the past. So that one probably doesn't count because that was already like the high. That one right there, they broke out. So that's probably the breakout profit takers. Okay. So I need to watch this area, especially 39.15. Already can see it's 2,000 contracts traded. Yeah. Okay, so 200, 135. Yeah. Okay, so it's right here. So what we should expect to see now is that the vacuum is here. So we may see a lot of volume develop there. Given the time of day and that we were in the counter trend period. That was interesting, actually. I don't think that will be this point of control for the whole day, but it's a possibility, right? Yeah, and so what we should see is a lot of volume trading there, but not necessarily all at once. And that when we get away from there, that the size of things increases. And that's the pattern that we're looking for that says to us that there's a vacuum, there's a hole there. Right. Now, that doesn't mean that they can't break out, because if the market buyers really want it, in fact, on that kind of a setup, there was some liquidity there, but maybe it's not enough to stop it. Let's check. Let's check on a couple of things here. Let's see if there's anything on Twitter. Okay, they're pointing out that Big Bank is looking at how the return on Bitcoin. Anthony Crudelli had somebody trying to masquerade as them on Twitter. It looks like a couple of the most shorted names out there are doing pretty okay. Look at that. GameStop is down, but AMC is up, BlackBerry's up, Bed Bath & Beyond is up. Banks are doing okay. Some of these are okay. Tesla's down again today, huh? Down 2%. It looks like AG had a little bit of a struggle there at the open, but now we're doing pretty okay. Yeah, it's a good little move up there. That one is maybe worth taking. That one, it's just reading the market orders, right? Market orders are getting pretty aggressive here now. You think that they'll go for yesterday's high at 39.20? Certainly within the realm of possibility. Okay. Yeah, there's some profit taking there on that. Oh yeah. 2020 looks like a pretty good target if this upside is to continue. Max, how have you been? Where you been? Are you getting back in now? The Bitcoin is going crazy. Coming in and stop to see how bearish I am, huh? Just suck up the right nerves. Don't trust anything unless there's empirical evidence. That's what I say. I tell you though, one of the things I'm learning is like a mathematical model that explains a certain behavior is some of the best kind of supporting. I wouldn't necessarily call it empirical evidence so much as it is supporting evidence. A model with empirical evidence showing that the model matches the market behavior somewhat. Those are some of the best. I'm going to take that off. There's too big of an iceberg there. Do I not know you, Air Max? Maybe it's a different one. There was a guy that used to come around here named Air Max that did cryptocurrency trading. And was with us when we predicted the 2017 bubble pop. Not a fan of Judge Peterson because he reminds me of the jump to conclusions Matt guy from Office Space. I really don't get the social media hate about Jordan Peterson. It's like he's a guy, he gets on talk shows and he shares information based on studies. That's great. And they all hate him for some reason. Oh, and he believes in free speech. So awful. You bought Bitcoin at 4,400? Oh, well, I guess you probably could get 50, huh? Still watching it. Like, the move today didn't necessarily have a explanation. The other ones, I think there was kind of like a news attached to it, like Elon Musk and all those sorts of things. This one today didn't seem like it was any reason. It just did it. Ooh, you know what drives me so crazy is that Zero Hedge like cheerleads for it so hard. At any time that anything good happens in Bitcoin, it's like the front page story. And anytime that something bad is happening in Bitcoin, they just let's down the memory hole. It's like, you think that they own some of it? Yeah, they definitely do. Elon encouraged. Oh, that's a terrible. Okay. I'll tell you what. Somebody else bought something, so I will is the trade that I hate the most. I think that one has a negative edge in my opinion. So by the way, Garlic Coin, well, they came back a little bit. So last night they were at 27. They were at 2.7 cents. Which was like another 10-20% increase. But it looks like that since overnight they've pulled back just a little bit, so now they're at 26 cents. Interesting to me. So like what's happened here is there is actually more money in Garlic Coin now than there was. It's just the supply. There's more supply than there was at the very beginning, right? So that's why you kind of just like discount all of that. Yeah, that's probably fine. Now you look at it and you're like, oh. Because these ones were like 1 day things and then it came back down. This one is like trend, you know? This one is trending. Oh, yeah. Oh, and it's really going up it with the, oh, which one is which? Okay. It's not rising so much compared to Bitcoin. It's actually, you see that gap between them? So that's the difference between Garlic and Bitcoin. So it's not bad. Forming an opinion and then finding some kind of data to manipulate an idea around to fit his agenda. Oh, yeah, that's what it. Oh, you're saying Peterson? No, I don't think so at all, actually. The reason is so Keller said Peterson comes off as the kind of person who would be dangerously deluded if he believed himself to be right. I think he draws from science data and whatnot, but falls victim to forming an opinion and then finding some sort of data to manipulate an idea around to fit his agenda. So I think that he is way more aware of that sort of a thing that compared to other people. And like here, the most of the cases that he's famous for are places where there is empirical data that very strongly contradicts some of the ideas that liberals want to believe. Things that I think if they don't outright falsify it, show that you're going to have to do a lot more study before you can continue going around and saying that X thing is a thing. You know what I mean? What time is it? 8? I'm still kind of thinking like, should I have gotten out of that? I'm way more cautious today because I can say like the robots didn't really take any. Brandon did take a trade, I guess. What did he take? Was it a short? Yes. He must have taken it short when it dropped down over here. That's exactly what he should have done, though. So, Indian Joseph didn't really catch anything. Joseph has a long. India, of course, always against the grain. But then, will they catch their targets? Well, it would have to go to like 23 for that to happen, so probably not. Thomas Sowell is like my favorite man. Oh my man, he is so good. He's not going to be around much longer. The thing that's so great about him is that like a lot of his opinions are like, well, oh man, silver's taken off. The dollar is getting creamed. The dollar. Okay, I see what's going on here. I can see if you were a bank wanting to take your dollars out and put them over into Europe, and so that you can make more use of them on Monday when the US isn't trading. There's also the thing with the treasuries. Like, the treasuries have come down significantly, and some of the dollar rise here, I think, was the demand for the treasuries. So that could be a factor too. Or it's just inflation orama, right? But that move in particular in silver looks really significant to me. In fact, is it? Can we zoom out here a little bit more? No. 10-day? Yeah. Oh, yeah. Okay, so the biggest daily high, they are about a few cents short, so 1740, and that will be a daily high. Overnight high, though, they were as high as 1770, so that's a good clip there, Win. Also, Peterson acts like one of those life coaches that wants to scream at you about how you don't have your life together, but really is a coke addiction himself. Well, you're familiar with the whole story about the medication that he was on and stuff. So I don't know what it was that they put him on it for. But they put him on this drug that is given the description of the drug that they gave him, if that was offered to me, I would be like, no, I'd rather die. Like, that's what I'm thinking. And so it wasn't necessarily like he did anything wrong or anything, but they put him on that, and then he couldn't get off of it. So his family put him in at a facility overseas, and the facility overseas, the program that they used to wean him off of it was a little extreme. Like, that's something that there's like some serious withdrawal problems with it and stuff, and it can kill you. And but he survived, and you can see when he talks since then that it hurt him. I wonder if his mental capacity is all there still at that age. That's the kind of thing where if that edge, you lose that edge a little bit, you can just lose it. Doesn't mean that he'll be dumb per se, but he might not be as quick in a debate as he used to be. Anyways, but he definitely wants to be like the life coach. Like, it seems to me that he feels strongly that, based on his psychological research, that he has seen certain kind of I want to say like life approaches that aren't as common anymore, that he feels if people had the direction, they would be better off in life. And so there's definitely a life coach aspect to it. A lot of the stuff that he talks about are like self-help advice, like the accounts, because he doesn't have his own YouTube channel, right? I've only ever seen people like post videos, recordings, like reposting recordings of him on like TikTok and stuff. And the TikToks that I show, like the accounts that show him, are always like self-help things. Okay, so GameStop is taking off here. Well, remember I said we got to be careful today because it's ahead of the weekend, and sometimes that's really slow. But we so often, probably about 55% of the time, 60% of the time, we get strong moves and sometimes really perplexing moves. And this move that we're getting right now, I'm not so sure that I would call what we just got in the E-mini a strong move. It's not even 20 points up. It's not even to VIX 1. But, and it could come back. We could get pulled back by the gamma at 3,900, right? But now seeing the dollar just absolutely crater and all of these commodities taking off, okay, that's definitely a thing. Like GameStop running, that's unusual. Now, how much? So GME is up 4%. AMC is still 2 and 3. So all of them went up, but not probably not as strongly as AMC. MSTR is still down a little bit on the day, although I think that they, had a pretty good overnight gap, but they've been kind of stuck around 1,000 for bits. Oh geez, for the puts that we bought in MSTR to expire in the money, they would have to completely crash this week. It's very unlikely to happen. He's too wishy-washy for me. Has a similar attitude to Seth that other people need to believe in the supernatural to control them. Yeah. Well, and that's that. I think that's an inaccurate portrayal of my opinion, because I don't think that people need to believe in the supernatural to be controlled, but rather I believe that ritual and group belief is necessary for health, that for people's mental and social health. Taking that one long, that one makes sense. That one makes sense. He does at least try to define his terms and then work out logical extrapolations. Well, that's what I like about Crowder. I tell you what, Jay Crowder, I absolutely hate his approach to a lot of arguments and stuff, because he's a comedian, but so he's very often trying to say the meanest thing that he can to people. So like when he tries to argue, I think that sometimes he argues in a way that doesn't really report himself well. But he does follow the logic. And the thing that I notice about him that it seems makes him effective at the debate thing is that he very clearly defines things. And I definitely have found that here on stream, that having clear definitions of things, like, oh my gosh, when I was in high school, my friend would always say, don't let words get in the way of communication, which I think is a really key insight, that oftentimes we'll argue over the language of something, even though we really do understand what they're saying, but because we want to win, we kind of play it on that. But then another thing that people have told me that especially when you're looking at people online, when you're arguing with people online, is so incredibly effective at judging a situation, is that people will use the strongest argument that they think they have first. And it's so powerful. You know what I mean? So you go in and the first argument that you use is mincing words and complaining over the word that they're using. Like, well, that's not really racism because it's not systemic oppression. Okay. That means that you have a shitty argument because you can't explain why some people are allowed to be hateful and bigoted and other people aren't. Right? His skits are cringe. Yeah, I agree too. I will see like clips of his show, but I would never sit and watch the whole show. I can't handle it. Anyways, so when you come in at the very beginning and you say, okay, this is what this means and this is what this means, and okay, you believe this, so let's just clearly define what it is that you believe. Oh man, when you start doing that, the vast majority of people can't work in that strict of a framework, right? And they just embarrass themselves. So the treasuries have pulled back significantly now over the past 30 minutes. I mean, when the metals and everything were taking off, they were like 2 ticks lower, and so the chart looked a lot different. But now that we're above this VWAP and everything, it looks like a completely different situation, right? So I'm wondering though, I believe, I could be wrong, but I believe that the metals are moving because of the dollar. Now, I don't have HG up here. Maybe I'll just add it to this chart right here. The one that you can't see right now. Duplicate a new tab. HG. Kappa. It's Kappa. Okay. So copper is moving. It is on the uprise, but it's not even remotely as strong. The Wonder Years was a great show. Oh my gosh. So my wife was watching that because I guess her sister was really into that show when they were kids. And I did not know that Neil Patrick Harris was the lead in that show. I was like, we'd been watching it for a couple of days, and then I'm like, oh, who is this person and this person? That sounds familiar. So I go and I look it up, and I saw the other person, and that was, I forget who it was, but that was interesting. And then I see that the lead was Neil Patrick, and I'm like, oh wait, what? How did I not realize that? It explains it now, and everybody talking about him being a childhood star and everything. Oh, yeah. What about spreads? Okay, so on this move down, there's been a lot of steepening in the 2 and 10. Not as much in the 30. ES. Today. Today it looks like that the S&P 500 is underperforming a little bit compared to the NQ. But that it's doing better than the small caps. In fact, oh no, the NASDAQ is down. Sorry, I read that. I have that wrong. The front leg is ES. So that means that the small caps are outperforming and the NASDAQ is down. Probably the NASDAQ is down because Tesla lost almost 2% today, right? But then when you come and you look at all these, okay, so the GameStop thing is retracing quite a bit. Silver got just like a really great run and is just holding it pretty well up there. treasuries look like they're going to go and break the high of the day. What? Well, there definitely seems to be some opportunity in here somewhere, but it's at the moment difficult for me to ascertain where the money flow is coming from. And I guess that when you're coming into a weekend, like sometimes you might see people closing trades and things like that. So you can kind of get some weird behavior that I always have a really hard time reading. And the S&P 500 coming back a little bit, so now my two robots are basically at even again. And Jay, you know what? I made that change to Jay to take into consideration the trend to improve its win rate a little bit. It improves the win rate a little bit, but it takes a lot less trades, and it seems that it just doesn't do as well. Most days it's coming just a little bit above break even. So I think that we need to do some work on that still. We definitely need to do some work on that still. Maybe if we get our volume profile set up, finished, and tested well, then we can try and recreate a directional movement indicator and do that a little bit better and see if that improves it, but with a more strict condition. Forex Live tweets, people are being reinfected with the new COVID variants. By the way, I've heard almost nothing from the new squawk in the past hour. Okay. So that's been in the last 4 minutes. The baby, he sounds so unhappy. Well, you know what? Now that my wife is getting ready and everything, because I do have to watch the baby today, I'm probably time for me to just get going. Maybe we'll stop a little early. May TSM have mercy on my trade. Wait, what? Wow, Peter Davies, he's been making the media rounds. He was in a Benzinga article today now, huh? Ooh, good job. I wonder when the next update's going to come out. I've been feeling it. Do you need help?
Wrap it up. Yes.
Okie dokie. So, what should we call today's video? Yep. Mm-mm-mm-mm. Mm-hmm. Should put in something about silver. That's what because the thing that I'm thinking is silver silver runs ahead of weekend. I don't know. Head of long week, I just take the point. Yeah, it's difficult. One of those, I tell you what, when these happened in the treasuries, it was always the most frustrating thing. It's like that slow moving train, So especially here where it went, did nothing for a long time, and then when it went, it went, and that looks really big, but it actually wasn't that big of a gap, was it? It looks like they could have more, like the 20 area. Looks pretty good, but if you're going to continue trading it today, I would just be like really careful because this looks like a market that would be prone to some crazy stuff in the options, right? It's not like the big expiration, but for some of these stocks, particularly Tesla, there is a lot of gamma coming off. So, okay, I'll see you guys on Monday. We'll do some programming. And I hope to make a video about GameStop this weekend. Oh my gosh, guys, I wrote this thing up and it was 5 pages. So I don't know if I'm going to have the time to do it this weekend or not, but I'm going to try. So see you then. Stay profitable, friends.